Gold and silver have just come through an extraordinary bout of volatility. A wild weekend sell-off that saw gold drop more than 20% and silver slide over 40% before some tentative stabilization set in. Even PGMs felt the spillover. After such dramatic moves, has the dust settled and what should markets be watching next? Joining us to break it all down for us is Rhona O'Connell, Head of Market Analysis EMEA and Asia at StoneX. Welcome back, Rhona.
Thank you, Hannah. Let's hope I don't break down as well.
No, you won't. Okay, so for the past few weeks, you've dropped the Cinderella label for silver in favor of Icarus. Now, if people don't know their Greek mythology, I'm sorry, look it up. So what does it say about where it peaked? And can silver ever revisit those numbers again?
Not in the immediate term, I wouldn't have thought, no, frankly, Hannah. It's been on gold's coattails to kick off with. But as we've said before, when gold moves by X%, direction irrelevant, then silver will normally do twice that much, if not more, in percentage terms. And it really got the bit between its teeth this time. And we found after the blowout in October, which scared a few people and the physical market became incredibly tight, things have eased a little bit, but it is still quite tight. Metals coming out of COMEX inventories, but not a huge amount. The London physical market has been struggling to find material, and that's all been helping to underpin prices. But then on top of that, once we had that blowout and we came through the Indian monsoon season, there'd been a good monsoon, good harvest, and that brought the Indian population back into the market. They had been fighting against the high prices, then they started chasing them.
Yeah.
China likewise. Southeast Asia, which is the other big consuming area of both metals at a retail level, was a bit more even-handed. But what we've seen since the blowout last Friday and through to Monday, the professional market obviously sort of stood back and shuddered a bit. But the retail sector, particularly in Southeast Asia, has gone absolutely gangbusters. And we've got the Chinese New Year coming up. That starts on the 17th of Feb, and basically there won't be very much action at all for 10 days or so after that. So there's some front loading going on there.
Yeah.
But again, as we've discussed before, the depth of the professional market in both gold and silver is such that the retail activity is just a very small part of the equation.
Right.
So at the moment, we've had another pullback today. There's enough continued geopolitical risk in the system to give gold a good bid when it comes back. Whether silver can do it as well is more questionable, because its fundamentals, while getting very much stronger than they have been in the past 5-10 years or so, it's got a great outlook. But we also have to remember that the cost of production is negligible because so much of it is byproduct.
Yeah.
So supply will keep on coming regardless, provided the copper and lead zinc markets hold up. And prices are going to be driven by demand, and demand in turn is generally driven by what's happening in the gold market from an investment standpoint.
Right. So do you think that after all of this volatility that silver and gold should still remain or keep their safe haven status? Or has this fundamentally changed?
Silver doesn't have a safe haven status.
Okay.
It's too volatile. You could almost, if you were going to rank gold, silver and Bitcoin, silver would be a darn sight closer to the Bitcoin end of the equation than gold would.
All right.
I'd never thought of that analogy before. I rather like that.
I like that. Okay. I'm gonna use that later.
Go ahead. Gold will remain well bid. I'm sure there's very little doubt about that. Although, if we go back to the London Bullion Market Association annual survey of analysts, where they ask us to do gold, silver, platinum, palladium, high, low, average. You don't have to do all of them, but they also ask for a few words around your call. I was expecting to be one of the most bearish analysts of the lot, and I'm in the bottom decile, but I'm not bottom, which I found quite surprising. We have to go back to the old arguments about geopolitical risk. And my favourite one, the Lisa Cook Supreme Court hearing, and the findings for that may not come through until July. And then in the background, we've got the midterm elections in the States, which in principle should point to a steadying of policies out of the White House. Whether that does happen or not remains to be seen, obviously. But there has never been a midterm election in which the party of the incumbent president has not lost seats.
Yeah.
So it's probably not a question of if, but how much.
Yeah.
So a steadying of policy will take an element of uncertainty away from gold. A finding in favour of Lisa Cook at that appeal will also take some risk premium away. So on that basis, I'm expecting risk premium to be unwound over the course of the rest of this year. But that's not to say it's not going to go higher first.
Okay. So let's go back to the falls, though. Can you point to a single event that could have caused the fall?
Nomination of the federal chair, so Federal Reserve chair.
Yeah.
Now, to be quite honest, he probably could have named Father Christmas. It didn't really matter who he named. The fact that a name was coming through was the absolute key.
What's enough? Okay.
Yeah. Catherine Univera, our wonderful strategist who's in the States, she put out a fantastic piece of analysis earlier on this week, arguing that Kevin Walsh, is not hawkish in the traditional sense that most people think of when they're using the terms hawk and dove, but she said he's an interventionist hawk. He doesn't like dot plots. He is quoted as saying that the Fed is most effective when it fades into the background. So it's going to be very interesting to see how this all pans out. That's something else which will probably keep gold well bid. Okay. Now, my guess would be that he doesn't take his seat until May. He's probably going to need a good 3 months or so to get really into the groove of things.
Yeah.
That basically takes us to Labour Day. So we could have quite an interesting summer as we see the different FOMC meetings coming through. But the other thing that needs to be remembered always is that the Fed is not a kingdom, it's a board of 12. So it's not a one-man band.
Right.
But it's still a supportive element while we wait to see how he evolves.
Well, a lot can happen between now and then, as we know. Things can change in very short notice. Tell me, how do the physical markets react?
Physical?
Yeah, how did the physical market react?
As far as gold is concerned, we've got strong retail demand coming through in the Far East at the moment. As far as gold's industrial uses are concerned, and we'll include jewellery in that because that's about 70% of total, that has been slowed down. Bars and coins are very strong.
Yeah.
Jewellery is slowing in Asia to a large extent. That is not quite so relevant in the Western Hemisphere because the caratage is so much more dilute with 9 and 14, whereas the Far East is 22 and upwards. So you don't see a fluctuation in price of jewellery in the West to the same extent as you do in the East.
Okay.
But the Financial Times is carrying something this morning. Pandora, who seem to be everywhere now, they're Danish by origin, very big retail chain. They've been quoted as saying that they're going to cut I think 60%. Now that presumably is by dollar value rather than by weight, but I'm not sure. Of their product mix is currently silver. And they're looking to bring that back to about 20% and bring in platinum-plated jewellery instead.
Is it? Okay.
Yeah, I'm not quite sure that's going to work. But that's the area that's going to be most notable. It's the middlemen, if you like. As far as silver is concerned, the big three are artificial intelligence, solar cells, and vehicle electrification. If we're looking at growth in demand, and that it's those three that will drive ever bigger deficits. But what we're already seeing for solar cells is, apart from thrifting, because everybody always tries to reduce their unit usage of expensive components, so that's a given. But there has been some talk, and in fact it's actually starting to happen now, of using copper paste instead of silver where possible. And that's already underway in China. So it won't detract from silver enormously because silver's electrical and thermal conductivity is so much better than everything else, and copper is second. But it will make a little bit of a difference.
I found it really interesting. In December, I got a piece of jewelry that I wanted to return, and I was trying to exchange it for something. And at the time, it was about 140 pounds. Okay. By the time that I actually managed to send in the item and wanted to exchange it for something else, that necklace had gone up to 170.
Well done.
Okay, hold on. But I didn't manage because I was like, why is it 170? That's weird. And then I forgot about it. And then I went back like 3 weeks later and it was at 210. Same item that had been 140 in December.
Excellent.
It was a gold necklace.
fabulous. Good for you.
I mean, no, not good for me. I'm just saying, like, the price went up, and I asked the lady at the jewelry place why, and she's like, it's just becoming so much more expensive to make them.
Well, exactly. So there's your middleman.
Yeah.
Well, I was in Dubai in, I can remember who I was working for, so it would either have been 2000 or 2001. And I was actually working for the World Gold Council, and I needed to buy a piece of jewelry. I was actually buying an engagement ring.
Yeah.
I paid for that.
Well done for you.
In more ways than one. He didn't last long. Anyway, I got the ring, and I knew where to go because I was working for an outfit that knew what they were doing. So they sent me to a proper jeweler. And said jeweler had just started a range of 4/9s, i.e. 99.99% 24 carat jewelry. So I came away with the brochure, and the gold price was through the floor at that point. So I went back to the hotel, armed myself with a suitably large gin and tonic, and started looking at the brochure. And I found the most westernized necklace that I could find, because some of it was quite clunky Middle Eastern stuff, but this one was lovely. And it was £700. And I thought about it, and I thought about it. And I said, Rhona, at 700 quid, you cannot afford that. Don't be so ridiculous. But by the time I was into my second gin and tonic, I remember what I do for a job.
Fine.
I thought about it and said, hang on a minute, this is not adornment, this is a currency transaction. And at the current gold price, it's worth about 8,000.
Wow. Well, there you go. Great investment. I hope you kept it. No.
Oh, I've still got it.
Okay, so where does that leave us? Where do we go from here?
I think we're probably going to see, we're going to see this continued volatility. And our bullion desk, thinking about silver specifically, are not expecting to see the carnage that we had last October, but they're very wary and they're very cautious, and I think everybody else in the market will be, which could actually lead, this sounds counterintuitive, but it could actually lead to further volatility because volumes might well be coming down. It will now, I would think, revert to following gold. Gold is almost certain to be well bid for all the above geopolitical arguments. Whether people are prepared to take the risk on silver, I actually slightly doubt. So I think that beta between the two might be eroded.
Okay. Well, Rhona, thank you so much for all that great insight. Now remember, everybody must keep their gold necklaces as investments. And
buy them in the Far East.
Exactly. Cheaper.
Much.
And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.